They told you quantum computing was decades away. That story sounds reasonable. It makes for clean headlines, and it gives investors permission to ignore the space entirely. But that narrative collapses when you look at what's actually happening beneath the surface. Right now, real businesses are already paying for quantum solutions. Not experiments, not concepts, but systems that solve problems they cannot efficiently handle with classical computers. One small U.S. company has been quietly operating in that gap between promise and payment, converting skepticism into customers and theory into revenue. That company is D-Wave Quantum, trading under the ticker QBTS, while the market often trades this stock on sentiment and volatility. Something more concrete is forming underneath. Recent price action reflects a sharp re-rating phase where optimism and profit-taking are colliding at the same time. That tension alone tells you this story is transitioning. The question is whether the underlying business supports the attention. What separates D-Wave from most quantum headlines is not marketing or futuristic claims, it's product adoption. Over the past year, the company has reported meaningful revenue growth in key quarters, improving non-GAAP gross margins, and multi-month bookings that indicate real demand from enterprise, research institutions, and public sector customers. These results weren't driven by hype cycles or one-off announcements. They were driven by customers deploying systems and expanding access through cloud platforms. This isn't roadmap speculation. This is revenue recognition. One of the clearest examples came from a major European research and computing initiative that placed a system order valued at approximately 10 million euros. The deal included multi-year quantum capacity and demonstrated something critical. Institutions are willing to pay for dedicated quantum resources today. These bookings are lumpy by nature, but that's normal for advanced infrastructure. What matters is that buyers are committing capital before the technology becomes mainstream. That's how early commercialization actually looks. Technically, D-Wave follows a different path from most of the quantum computing companies investors hear about. Instead of focusing on universal gate-based quantum systems that may take many years to mature, D-Wave specializes in quantum annealing combined with hybrid quantum classical workflows. This approach is designed to solve specific classes of optimization problems, including logistics, scheduling, routing, and certain machine learning tasks. These are not academic exercises. These are real problems that companies already spend millions of dollars trying to optimize with conventional computing. Where gate model vendors promise future universality, D-Wave focuses on present utility. That distinction matters. It explains why enterprises are paying now instead of waiting. It also explains why the company's customer base includes organizations that care less about theoretical breakthroughs and more about measurable performance improvements. Commercially, D-Wave has been deliberate. Management has layered its go-to-market strategy across several fronts, expanding cloud access to its Advantage2 systems, selling on-premise hardware where appropriate, and growing service-based bookings. At the same time, the company announced a government-focused business unit aimed at accelerating adoption across federal and defense agencies that move signals a long-term strategy. Government contracts tend to move slowly, but once secured, they often become multi-year high-value and difficult to displace. When those elements align, revenue visibility improves. This is not a one-sided story. D-Wave continues to report operating losses, and GAAP results have been heavily influenced by non-cash accounting items. Warrant remeasurements and stock-based compensation have inflated reported net losses, while operating expenses continue to rise as the company scales research, engineering, and commercial operations. These dynamics introduce dilution risk and capital efficiency concerns that cannot be ignored. This is still a small-cap company operating at the edge of emerging technology. If you value calm, research-driven breakdowns like this, focused on real signals instead of hype, consider subscribing. It helps support continued coverage of overlooked U.S. companies with real-world relevance. Looking ahead, there are several signals that matter more than headlines. The first is bookings cadence. Large system sales will always create revenue volatility, but they also reveal where demand is concentrating. The second is government traction. Progress within federal and defense channels could materially change the revenue profile over time. The third is cloud penetration. Broader access lowers friction for new customers and creates optionality for expansion without heavy capital commitments. Volatility remains a real risk. The stock has experienced wide swings as traders rotate in and out of the quantum narrative. Balance sheet discipline matters. Cash runway, operating leverage, and dilution risk will influence long-term outcomes. There is also an ongoing debate within the research community around the boundaries of quantum advantage, and those discussions can affect sentiment faster than fundamentals. For investors, the framing is straightforward. QBTs behaves like a small-cap growth company with event-driven risk. Major bookings, government updates, and system deployments act as catalysts in both directions. For longer-term positioning, success depends on commercialization, momentum, and disciplined capital management. The opportunity is real, but it is conditional, not guaranteed. This is not financial advice. The purpose here is analysis and context based on public filings, press releases, and market data. Always do your own due diligence and consider risk tolerance and portfolio sizing before acting. We highlight signals, not guarantees. Institutional attention is beginning to form around the company. Several sell-side analysts and specialized research firms have initiated or adjusted coverage, citing improving commercial metrics and relative cash positioning compared to peers. Analyst views vary widely, which underscores the speculative nature of the sector. But institutional coverage itself reduces information gaps and can improve liquidity over time. The next few quarters are critical. If bookings translate into recognized revenue with improving margins, the narrative shifts from promise to execution. If expenses accelerate without corresponding demand, sentiment may reverse. Conference demonstrations, system deliveries, government procurement milestones, and customer case studies will be the proofs that matter most. In conclusion, D-Wave represents one of the clearest near-term commercialization stories in the quantum computing sector. Its unlilling-based systems are already in use. It has secured meaningful system bookings, and it is positioning itself for longer-cycle government opportunities. At the same time, losses, accounting complexity, and volatility demand discipline. For those seeking exposure to quantum computing that prioritizes real payments over distant promises, QBTS stands out as a company worth monitoring closely, sized appropriately, and judged by execution rather than headlines. This is analysis, not advice. Do your own research and size positions according to your risk tolerance. Focus on signals, not sentiment.